Hi, Dean Jenkins with FollowMeTrades.com, and this is the market update for the week coming up of March 9th, 2020. And wow, the volatility continues. So the overnight futures on the major indexes and commodities are dramatic. The S&P 500 futures are down 131 points. That's nearly 4.5% on top of the previous drops from the last couple of weeks. So that's implying a big down open Monday, tomorrow morning. Gold is up, and I'm showing the futures here on a 10-minute chart. So you can see the big gap down as the overnight markets opened, and it's down big time. The Dow futures, if you track the Dow, are down over 1,000 points, again over 4%. Gold is surging up, and really the really big news is oil. Oil futures, you can see here on this chart, 10-minute chart, oil futures gapped down 20%, nearly 21%. And that's on the news that OPEC and Russia had been coordinating production cuts because of the slowdown in travel, the slowdown in demand for oil, and Saudi Arabia just pulled out of that. And apparently Saudi Arabia is going to open the spigots and start pumping more oil and bring more supply into a low demand situation. So I've been trading a number of years. I've never seen a 20% move in oil. That's big and unprecedented. So really disruptive stuff going on. So that's the short term, 10-minute overnight chart. Let's jump over and take a look at the indexes on a little bit bigger picture and see what we can forecast. So this is the S&P 500 cash market, and I really prefer the S&P to look at the overall market. It's 500 companies. The Dow is just 30 companies, and the NASDAQ has a specific focus. They all move generally together, but I like the S&P the best. So you can see we're in a correction, right? We've had a dramatic move down. Thankfully, in my trading with my subscription service, we've been on the right side of that. We're having a great year. We're about 24% profit for the year in the first 2 months, and it's been great. And we even had some longs as a part of that. But the technical analysis here on the S&P 500, from the move we had down at the end of 2018, all in 19, it went pretty well straight up. So a correction just to that latest move would take us into this Fibonacci retracement zone of 38.2 to 61.8, these blue lines you can see here. And the overnight open is taking us, right into this range, right about here. So pretty deep into the correction zone, right about here. Okay, but there's some more to go, and it could go through this range. It could go deeper, and I think there's a chance it could do that. We've already taken out this low from a couple days ago. In the overnight open, and let's switch real quickly to a longer term, to a weekly chart. The bull market has been going on, for 11 years. It's been pretty dramatic. And so if I take out this short-term view and look at maybe what a longer-term correction could look like, here's really the retracement point from the start of the recovery after the the financial market crash. Right, big move up, huge bull market, 11 years, right? A correction to this, if we get a full-on correction, could take us down to the 2,200 point range on the S&P 500. So we're going to watch it short term. We're going to look for trading opportunities. If it's just a correction from this low on the daily chart, there may be a little bit more to go. We'll participate in that, but there could be a bigger move coming down here, so we're going to watch for that. So the key to trading, a very volatile market like this successfully is, not to get caught up in the headlines and the hype, but just to watch price action, to look at trends, and to, be careful. Last week we had, 1,000 points down on the Dow, 1,000 points up, 3-4% moves in all the indexes. The momentum right now is down, and it's down more with the overnight open. So clearly that's our bias. But there are also some long opportunities. Gold's heading up, gold mining stocks, and there are some stocks that are doing well if they're positioned to help deal with the coronavirus, or working remotely. Zoom's doing well. So there are long opportunities. We're going to trade the realities, and it's important to always still use risk management. Don't decide that that's a bottom and it's going up, or the bottom's going to fall out, and just go bet the farm on it. That's never a smart move in any market, and particularly in a volatile market. So it's important to follow a set of trading rules, to use risk management, and then trade the realities of what's going on. So if you're not a part of my stock option pick service, you certainly are invited to give that a try. You can take a trial for $37 for 30 days. And we're picking some good winners in this trend, up and down, and we got more coming. So that's the update. The market is heading down. It's volatile. We got to trade the realities. We got to use risk control, running with wide stops to account for that volatility. But there are real profit opportunities in a volatile market if you have a good trading plan and if you follow risk control. So it's going to be interesting. And Monday morning open, I can't wait to see what happens, but it looks like it's going to be dramatic, and we'll be trading accordingly. All right, that's it. As always, I welcome your questions, your comments, your feedback. Thanks.